If my husband and I, both shareholders of our C Corp, discuss business over dinner, are we able to be reimbursed for our meals? Is there a list available of reimbursable expenses for employees, owners of C Corps that is easier to read than the tax code?
Well, with Valentine's Day, I picked this one just because of the dinner. That's gotta be romantic. Let's talk tax over dinner. Um, can you, the thing Toby's always gonna hit us with here at Anderson, what was the intent? Whenever we talk about deducting meals, what was your reason for going out to dinner? If the intent was to talk about business, then generally speaking, you can deduct it, whether you did business or not. But if you go out to dinner and then start talking business, that actually is not a tax deduction if you didn't have the intent to do so. So that's one thing, just always say you have the intent. What I like to kind of ring or hold clients back a little bit on this, or rein them in a little bit here, is that they want to deduct every meal then. We go out 3 times and all we do is talk business. We go 3 dinners a week. There's got to be a reasonableness to it. And, it has to have a business topic, et cetera. So I would not try and deduct all my meals, and what's reasonable. Well, that's just going to depend on the facts and circumstances, but intent and, reasonableness. Well, we'll leave that part. I don't know if you want to address that.
Would you discuss work at your Valentine's Day meal?
Being I'm single, I probably would. That's probably why. Bad idea 101.
He would, yeah. Trying to help you here, my friend. I'm just.
Yep.
You're incorrigible. You're incorrigible. That's even a bigger one. All right.
I got some.
I had to. Yeah. They're sending you love because they're just like, this is where they say, what did they say? What's the word they use in Texas?
Sad?
No. Grab him quick. That's why you see. They're just mean to you today. Bless your heart. That's what they say. Bless your heart.
Oh, yeah.
Bless your heart. I know a few people. Bless your. I don't understand. All right, so there's 2 cases actually. So I'm a case snob. So there's Sutter, where every day this I think it was a doctor was taking out his employees to lunch, and the IRS has the ability to say, hey, you can only deduct business meals to the extent that they're greater than your personal meal. If you're doing them every day, in other words, too much of a good thing, and it's the old rule that pigs get fat and hogs get slaughtered. Don't be a hog. So don't go every day, right? But if you have a business meal, yes, you can write it off if you meet the requirements. And I would say there's a heightened requirement if it's spouses. And so you're supposed to do the who, what, where, when, why, right? So the receipt, if you guys are having a meal, covers a couple of those. And then what was the purpose of the business meal? And what did you actually discuss? And if it's a husband and wife and you want to bomb-proof this thing and make sure that there's no way that they can attack you, is write a summary. Just a quick summary. It can be really short and just say, this is what we discussed and here is why. You got to show a profit motive at that meal, and then it's only 50% deductible.
Yeah.
Yeah, so they always say it's a 50% deduction because you would have eaten anyway. And what they're really trying to do is get you to do to write off the amount that is in excess of what you would have done if it had just been yourself. So here where we have spouses, there are some cases where it's hard and fast. If there's no docs, you're done. But if you could show, especially in this case with the C Corp, hey, I just track it. It's an accountable plan. It doesn't say you and your spouse went to dinner. It just says meals at 50%. And then if you have it every day, you're probably going to run into trouble. If you do it periodically to have like a weekly meeting, I think you're fine. And that's the big one. So, and then do you have that sheet? Did you guys share a sheet? Patty, did you share a sheet of all the business deductions? Adriana, you don't necessarily have to do meeting minutes, but you can. You could do something like, again, I always say, just take your phone out. See if it's jammed in here somewhere. And just put it in your calendar. Hey, I met, and this is what we talked about, and you should be good. And that'll get you. All right. So Patty says, here you go, but I didn't see what you attached. Oh, Everybody says thanks. Maybe it's already out there somewhere. Oh, there we go. There's a link. All right, and it's not an extensive list. I mean, it's a list that we use like when we do 2-year tax reviews. We're looking at the usual suspects, but anything that is ordinary necessary to a business can be deducted.
Exactly right.
So with very few exceptions.
We can avoid the tax code now.
Yes. And oh, excuse me. 2 cases. Sutter was the one where they said too many meals. The other one was Fletcher. And it was the same situation, but here was an interesting one. In Fletcher, they denied the deductions that was just the husband and wife because they had no backup, no documents, but they allowed every meal where they had a third party there. So if in doubt, bring along a third party, and it seems to make you cross the line. So they didn't have enough documentation to back up the purpose of that meal and the reason it was an expense and what was the profit motive. They didn't have enough for that for themselves, and they got denied those deductions. But they were allowed every single meal that they had with a third party.
That's great. Good stuff.
So, yeah. So anyway, it's just one of those weird little nuance things. And if you're a tax nerd, you like that stuff. Some of you guys might like it.
If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.